Rates are all over the place. You see anywhere from mid sevens to the 10% range, depending on the deal itself, the loan amount, the background, the credit score. So these are, even though they are spec construction loans, they still run a credit. They price on credit score. Document your experience. If you've done some substantial rehabs, they can sometimes classify as ground up, but you want to verify and document your experience. You want to put together a good construction line item budget. So we shall see new projects coming our way.
Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. And now, your host, Beau Eckstein.
Hello and welcome to another episode of the Investor Financing Podcast. And I'm your host, Beau Eckstein. And on today's show, we're going to talk about ground-up construction loans for 1 to 4 unit properties, so mostly residential, but these are for spec builders. People that are buying on speculation to sell, not for owner occupied. We're just doing strictly business purpose type loans made to an LLC or business entity, sometimes made to an individual, but oftentimes to a business. And so the big national funds are opening up the floodgates now. The lenders that are doing a lot of the fix and flip lending and so forth. And now they want to do ground up construction. And I want to talk about the program. So the general guidelines look like this. You can get up to 90% loan to cost. And this is for an experienced builder. You have to have a track record, and not a track record as a GC building for others or a real estate investor doing flips. You need a track record as the owner sponsor that you've purchased and developed spec construction properties before. That's what they're talking about, experience. A lot of people getting into it say, well, my GC has done some. We can sometimes bring a GC into the mix that's got a track record of building in the area, even though you don't have the experience. But it's a lot easier if the sponsorship or the ownership team does have experience. You're talking about general guidelines, LTC up to 90%, gross loan amount not to exceed LTARV of 75%. So that's the loan to value of the ARV. So they're going to look at the subject to completed value, and the max gross loan amount can only be 75% of that future completed value appraisal. And you can finance up to 90% loan to cost. So that would mean you're putting down 10% of purchase price and 10% of construction costs. You make monthly interest only debt payments. Typically, not always, these are funded on what's dispersed, meaning that if you have $300,000 and you take a $50,000 draw, you're only paying interest on that $50,000. Now, some are Dutch interest where you're paying on what we call the full boat, but the majority now are just Dutch interest. But you need to know that up front when you're comparing apples to apples, what the total cost will be for the funding.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Are you in the market for a commercial loan? Did you find the perfect opportunity but need funding? Have a special situation? At Find the Bank, you will get quotes with competitive rates and terms from multiple lenders without any hassles. Have a multifamily property, construction project, owner-user property, industrial, mixed use, hotel? At Find the Bank, you can get nearly any kind of commercial financing. The process is simple. Once you send us some information about you and your property, we send back a quote sheet. Then we quickly connect you with an advisor. You won't spend hours calling multiple banks trying to find the right person to talk to. We'll connect you fast to the right person, hassle-free. Better terms than you could get on your own. Go to findthebank.com and complete the form. An advisor will be connected with you within minutes to discuss your specific financing needs.
Rates are all over the place. You see anywhere from mid sevens to the 10% range, depending on the deal itself, the loan amount, the background, the credit score. So these are, even though they are spec construction loans, they still run a credit. They price on credit score. and LTC, loan to cost. Obviously, if you're bringing in more capital, you get a little bit better interest rate. Same thing on the fix and flip. You get better interest rates, a little bit lower leverage because it's less risk in most cases. So bottom line is now is a good time to be looking for developable lots, infill, or in emerging markets. Typically, you're going to get the best results by not doing some secondary, tertiary market where there's not a big population. It's easier to get deals funded, obviously, in larger MSAs. But document your experience. If you've done some substantial rehabs, they can sometimes classify as ground up, but you want to verify and document your experience. You want to put together a good construction line on a budget, and just expect that there is an influx of capital right now for construction. I'm seeing it across the board, which is great because we need more inventory. So we shall see new projects coming our way. So anyways, if you have any construction loan requests, let me know. Happy to help you. I think outside the box. So I have a client right now that I'm working with. He had a free and clear duplex. And I said, listen, why don't you get a 30-year portfolio rental loan? You can pull out $160,000, which was 65% loan to value at pretty good terms. We don't have to deal with the banks, tax returns. Go pay cash for the lot. Pay all your soft costs, right? Because this is all going to be documented and being part of his new construction loan. But this way, you can get it shovel ready and then you go apply for the construction loan. It just works better that way. The other thing is you can have extended escrows if you're purchasing a lot and make it contingent upon being shovel ready when you close. So basically the seller is allowing for you to get all your plans and engineering and get the property entitled, and then you close on it once it's entitled with the construction loan all at once, so you don't have to do a bridge loan to construction. Anyway, love talking construction loans. Thanks for watching. See you on the next episode.